Hello and welcome back to WealthWave Daily, where we ride the biggest financial trends shaping our future. Today, we're diving into the dramatic rise of Bitcoin ETFs in 2024 and exploring how they could reshape the markets even more by 2025. There's a lot to unpack, from the SEC's historic approvals to the product innovations we're seeing and the regulatory shifts under new leadership. So buckle up and let's set the stage for this fascinating journey. Let's start with a little context. Until recently, Bitcoin was often viewed as a niche digital asset, intriguing to some, baffling to others. But in early 2024, everything changed. That was when the U.S. Securities and Exchange Commission, or SEC, approved multiple spot Bitcoin ETFs. This single regulatory move was a turning point, effectively catapulting Bitcoin into mainstream finance. We saw financial heavyweights like BlackRock, Fidelity, and Grayscale among the first to launch these Bitcoin ETFs. Their involvement signaled to the broader market that, hey, Bitcoin is now a serious asset class. The reason behind this enthusiasm is twofold: regulated exposure. Many institutions wanted to get in on Bitcoin but were hesitant due to custody and regulatory uncertainties. With an SEC-approved ETF, those concerns eased considerably. For individual investors, it's as simple as buying a share of any other ETF in their brokerage account. No more worrying about losing a private key or dealing with multiple crypto exchanges. We didn't just see plain vanilla Bitcoin ETFs. The market quickly evolved to include multi-crypto ETFs that bundle Bitcoin with other digital assets, options-based strategies designed to manage volatility, downside-protected funds for risk-averse investors, and hybrid instruments combining different financial tools under one umbrella. All of these new structures cater to diverse investor profiles, from high-risk speculators to conservative long-term holders. But none of this could have happened without a big change in the regulatory atmosphere. The 2024 election led to President-elect Donald Trump nominating Paul Atkins, a former SEC commissioner with a clear pro-crypto stance, to replace Gary Gensler. Gensler had been known for his stringent enforcement approach, cracking down on many crypto-related ventures. He was skeptical about the sector, citing concerns over fraud and market manipulation. While under his leadership the SEC did approve some crypto-linked ETFs, mostly futures-based, the path to a spot Bitcoin ETF remained fraught with challenges. Atkins's nomination signaled a more crypto-friendly approach. He's been vocal about wanting lighter regulation that encourages innovation. Under his leadership, the SEC is expected to streamline compliance for digital asset firms, paving the way for not just Bitcoin ETFs but also for a range of other crypto products such as Ethereum derivatives and possibly multi-asset ETFs featuring a broader range of tokens. This shift could lead to more robust product offerings in the coming year. We might see ETFs tied to Ethereum staking, multi-crypto indexes, and even sector-specific crypto funds, think DeFi or gaming tokens. As regulatory clarity increases, institutional confidence is likely to grow in tandem. So, what does the crystal ball show for 2025? If the first half of 2024 is any indication, we're looking at a continued surge in capital inflows. Analysts from firms like Bitwise and others project net inflows exceeding $50 billion by the end of 2025. This is driven by pension funds, endowments, and hedge funds that now feel comfortable diving into a regulated product. As more banks and brokerages offer Bitcoin ETF access, digital assets will become an increasingly standard part of portfolio allocations. We might see models like the classic 60-40 stock bond portfolio evolve into something like 59-39-2 with a small slice dedicated to crypto. With more participants in the market, the liquidity for Bitcoin is expected to deepen. This can lead to more stable price discovery, though we should still anticipate some volatility. Crypto is, after all, still crypto. The success of Bitcoin ETFs could serve as a gateway for other digital assets. By 2025, we might see spot ETFs for major cryptocurrencies like Ethereum, Solana, or even baskets of DeFi tokens, provided the regulatory environment remains supportive. Let's distill these insights into actionable takeaways. The SEC's green light in 2024 gave Bitcoin unprecedented legitimacy. This is a big step toward recognizing digital assets as a permanent fixture in global finance. Bitcoin ETFs open doors for investors who want crypto exposure, but don't want the complexity of wallets or the security risks of self-custody. The pivot from Gary Gensler to Paul Atkins could herald a wave of more crypto-friendly policies. Keep an eye on the SEC's announcements and any new rulemaking sessions. Whether you're risk-tolerant or risk-averse, new ETF structures, from multi-crypto bundles to downside-protected strategies, could offer a variety of ways to tailor your exposure. With forecasts suggesting even higher inflows in 2025, now might be the time to research how these ETFs fit into your broader investment strategy. Remember, while optimism is high, volatility is still part of the crypto DNA, so always manage your risk accordingly. So there you have it, the deep dive into how 2024's Bitcoin ETF approvals have reshaped the market, and why 2025 is shaping up to be an even bigger year for digital assets. From regulatory upheavals and leadership changes at the SEC to innovative ETF structures and massive inflows, the crypto space is evolving at lightning speed. Thanks for tuning in to Wealth Wave Daily. If you found this episode helpful, be sure to like, subscribe, and hit that notification bell so you never miss our next deep dive into the world of finance and beyond. And of course, drop your comments and questions below. I'd love to hear your thoughts on Bitcoin ETFs and how you're planning to position your portfolio in 2025. Until next time, keep riding those wealth waves.